Morning, everyone. This is Rose. Today is July 24th, Wednesday, 20 minutes after 9 a.m. If it wasn't Ken, I wasn't going to show up this morning. I'm so sorry, everybody. I thought for some reason, I kept telling myself it's Tim Fairweather this morning. I just don't need to roll out of bed. Don't go out for jogging. Don't go to gym. Don't do breakfast. Don't feed the cat. Don't do anything. Just relax, put in a trade, and, just enjoy the day. And I get a text message, and Ken says, "Are you okay?" Oh, so I apologize, everybody, for my tardiness for 20 minutes, but looks like I'm on my own today, which I'm going to check this calendar again because I'm now doubting myself. So I'll add the missing time at the end of the session. So I apologize for that. I'm not really ready, but I will be in 10 minutes. I was actually getting ready to trade for myself, so it was a good timing. Thank you, Ken, for sending me the message. So anyway, we reached my sell zone, and I had these trend lines. Remember that when we put it together, we just bounced from that, and I said we're going to get there. We just have to come back and retouch that in several. I had to drew that one, but eventually we reached this area, and I kept telling myself I'm looking for a sell pattern, a bear pattern, a bull trap pattern. So I want to sell this, and here it is. That's head and shoulders pattern, and even a more complex one. And I said, if I break this, if price breaks this, I'm definitely going to sell. And we did break it, we retouched it, and the day ended. But they kept selling. I mean, look at this, beautiful. So you have wedges here, you have a double bottom here. Market is looking to reverse. So we are going to reverse. We might go back up to this tight trading range area, or maybe even this trading range area, but I need to clean this up a little bit. So I'm going to get ready. This is how I put together my Globex chart in the morning pre-market. So I count about 4 bars, 1, 2, 3, 4, starting from the 4th bar to the midnight. I mark that area, the range. I mark that area, the range. And I find my Globex session boundaries. I find my Globex session boundaries. I was just having my coffee and relaxing, and then sudden panic. You know how that is. Okay. And I find a midpoint, and that is yellow label price line, is for the mid-Asia because it is the first trading range that we break out of. So banks and institutions pay extra attention to this trading range. That's why I marked the midpoint of that, because it tends to be a magnet for price. And of course, for the U.S. session, it's the U.S. Open midnight. I mark, and that is that bar right there. If I can see, there we go. Okay. There are still, this area we have oscillated for some time. I'm just going to extend that because it's kind of important. I'm going to go back right into that eventually. This to me is done. I no longer care for it. We do have a double bottom. This area is now the resistance, but it's also trading range. So I'm going to extend that. Or 2, in fact. but this one's a lot more valuable, I believe. We are oscillating around this, so we're probably going to get back to it if we can find support here and bounce. Now there's another one right there. Important price action took place here, so when price gets here, I'm going to look to sell. They actually should be red, not green, but once we start to buy, we tend to snap back to these price lines. I don't have anything here in the Globex range, but this is a small trading range, so we're going to test this trading range. If there are any sellers here, we could still continue to sell, but we break this trading range, we'll break above it. Next one is the Asia, so we can get back to the Asia. Let's take a look at the daily. Getting towards the end of the month, so the monthly bar is still bullish, but it's slightly below its midpoint. It's not all that bullish, but bulls are still trying to keep it as bullish as possible, and the bears trying to close it on its low so they can get some kind of a sell signal. But as is, I don't think it is a good sell signal, although profit taking is pretty visible on the weekly. We have not reached that weekly measured move targets. We could still get there, and that's what might be the fight on the monthly chart. They're trying to find buyers and go back up, but we break this trend line. We're going to come right down to the moving average, and this area, for sellers, this area is important. So they have to really break not only this trend line, but also this one. But since that's going to be the second test, I believe the buyers are strongly waiting here. Anybody starts to sell could have a rude awakening, and we could go right back up here. I don't think bulls are ready to give up this market. Eventually we will come down here, but what we could do, what they could do, come down as everybody's selling and hoping that this is going to break. We bounce, we make a double top, perhaps lower high, and then we break it. Then we come down here. This is where I'm going to buy once again. But this area is important, and this is where the bears want to come down to. But moving average is important. Moving average is trying to catch up. We're probably going to bounce there, make a new high. If it's a lower high, then that's great. And I'm going to look for a break, and then eventually we will come down here. Daily we do have so we're testing above this bar, and we have a bear bar, but it's not all that strong. So if we go up and come back down, or come down and then continue to go up, that will be a leg one, pull back leg two. Leg two could get us here, then we could get down with another pullback and go back and retest this area, this gap area, and then come back down. But we only have 3 days left. Let's see. I want to check something real quick. Okay, so we have 10 o'clock new home sales. PMI 945. So we're in 15 minutes time, 60 minutes time. We have PMI, composite flash, new home sales 10 o'clock, and then we have, if you're trading oil, 10:30 comes out. Then tomorrow is big deal, durable goods, GDP 8:30, international trading goods, jobless claims. All right, so here we go. We gap down strong. So what does this mean? We are breaking these trend lines. So if we can go up with double bottom, go up around here, that's great. But we go up and somewhere around here we found resistance. Then moving average, which is 50 SMA. This is daily. 50 SMA is going to be magnet. So I think the market needs to, if this is too low, we're right at the heart of this trading range. This area is area of interest. The first test bounce, and the second test If we find buyers here, we're going to try to get back up, but we'll see how this goes. What about going up and then coming back down? So that would give us a 1, 2, and 3 wedge bottom, and then reverse back up, impossible. But we have opened somewhere in an area where selling might be difficult because you're at the heart of that trading range. One more thing I want to check. For bears, if we start to get bars selling, we need to break this day's low, and this could be the target right there. But I think we need to pull back. This is just too low to sell. Hourly chart, same. Look at this trend line. Remember, as I said 2 days ago, we're gonna break this trend line. We're gonna come back to it, and then I'm gonna buy. We've tested the moving average, which is this one's I believe 50 is, wait, no, 100. Red is the 50, and that acted as a resistance. We came down and broke. So low of last week is magnet, but if we break the trend line, we could continue to come down. Otherwise, if the trend line holds, which is an important element on the chart, we're going to bounce. So there's a bit of a gap here. Could be too low to sell. Okay. Big gap down at the open. Down at the open. Low of last week is right around here, so it's a magnet. We're so close. I mean, we could break the Globex low, and then trap and reverse back up. So then, if we do that, then this area is target. Big gap down means, well, market could agree to continue to sell, or will disagree at a support area and reverse back up, and it will be in search of a fair price. So I would take 19 bars from here, the prior day, and 1 bar from here, and find the average price to snap back to. But I need to see the first bar close. Okay, we did reach the low of last week. What if this is too low to sell and market wants to continue? Look, bears already trying to break this. They're trying to come down to this area, but I'm not going to sell this bar because it's just too low, too much of a gap down. Some will sell the close of that bar. It's a really good close after all, and market might come down to 55, 32 area, 31.50. I have not sold anything, but 15-minute bar is trying to reach this area I marked. Could we trap the bears here and reverse right back above the low of last week? Bar 1 closed really nicely, so they could continue to come down. And the first bar close is really bearish. My only problem for bears is that it's just too much of a gap here, and when I sell a bar like that, I know they're going to try to trap me, so I don't like to sell this low. If you have sold 31.50, this area, target Could come down even more, but on the daily, 3150 is a good place that we could bounce. All right, two bear bars, both closing on their lows. That's a good sign for bears. But the problem here is that, yeah, we can still come down. It's just that it's too low for me. Look to see what this pullback is going to do here. Extending the sell. Logical place to test right here on the Globex. Here is the example. Two bear bars closing on their lows. Pullback could come down, so that would be leg one pullback, leg two pullback, leg three, and then market goes back and makes a double top. Then I will swing. But what about we reverse right back up? Logical area to test, both on the daily and here. Might even come down further. I don't know on the hourly, but I like to see this form before we reverse back up. Even come down further. I don't know on the hourly, but I like to see this form before we reverse back up. So if you have sold the close or below bar one, you're looking for possible two more legs down. Or at least one more before reversing back up quickly. Probably sellers above bar two, and we just test it with bar three. News in less than 3 minutes. What about market selling? Continuously is selling. All right, we need bars with gap bodies. You still count 3 legs, but larger version before reversal back up to the moving average. What about this? We go up, shallow pullback, we test the bar one high, and then swing small pullback bear trend. Sure. It's news hour. I would be extra careful here. Anything possible. Gap down after 2 bear bars, and then goes back up and tests the 1 and continues to come down. Or we're going to get this. We keep on both scenarios, or the third one, we keep the gap open 20 plus bars, and this one was all day long sell. At the end of the day, 99% of the time we test the moving average once. Here you have a lot more than 40 bars, and then we go into sideways up. We trap the bears. That's first, second, and third touch, and a bear flag, and sells again. Resumes the trend. Here, that's bear flag even earlier. 20 bars, 10 bars, 2 legs, goes back up, and then sells. So today could be a bear day. All right, here we go. 5 seconds left to news. Another target for bears is somewhere there. 24. Bears trying to resume the sell with this pullback. They want to test the 55.35 and then continue down. This area is target area. We just tested the 55 35. Well, not really. Well, let me see. Yeah, with the test, and I said it's probably going to bounce there quickly, but it will test. So now if the bears close below it, we're going to continue to come down. Bulls want to test. Bulls want to trap is with the second leg down is go back up and test the bar one high, but we might get another third small leg down at least. So bears can continue this depending on how this bar closes. If it closes on its low, we will move underneath 55.35. Just waiting for bears to, okay, so they claim one of my targets, but I think this is the daily target, 31.50. So close, we could perhaps test it. And from the ETA chart, for bears, 40-point target is right here. So this is the daily. There's a 10 a.m. news coming up. This is a trend, bear trend target for bears. Continuation. Could go a lot lower than that, but first needs to test that. Bears need to move underneath 55.35 to continue to sell. I did sell, by the way, finally, and scalped a little bit, holding a runner. Let's see if we can get a little better price action from bears here. So I did mark where these targets are coming from. It's on the chart. Pre-market, I talked about what those are. So if you just arrived, we can talk about it later, but that's the daily target, which is right here, which we met. We could continue to come down. I've got a 40-point target, which is a trend target from the ETA chart. Globex area, we've met these targets. Could continue to come down more. I'm more interested in the 40. We could get another 5 points, 10 points below before reversing. So this is two bear bars at the open. So the bears see this as a trend from the open, and they're trying to continue to come down. Now, if you want to find support, that's not support. I've never said this is support. You need to look left. Let's take a look. Enough information on the. You can do this on the 60-minute chart, 30-minute chart, 15-minute chart. I'll do it on the 5-minute chart so you can see more. There we go. There is tight trading range here. Again, I don't like. It's not tight. So now it is. It's not tight. So now it is. And we're right in there. Okay. All right. It's not the color I'm looking for, so I'll just stick to my color coding. It's going to bounce eventually. This area is now kind of support, if that's what you're looking for. It's a tight trading range, so it's a magnet. And I had 2 micro targets in there. We could go down a little bit more. Okay. So at this point, you should be trailing your stop. Okay, is anyone sold underneath bar 1? Sold again above bar 2. Sold underneath 3, that's follow through. That's a bull trap. If you haven't sold anything, then sell bar 4 close, which is what I did. Because with the bar 4 high, you got a bear flag there. 2 bars, it's trend from the open, looking to trap the buyers who are looking to test the bar 1 high. No bull bars, so sell. You can even sell 1 tick underneath 4. Is to profit at the daily target line. Held a runner and added another contract with the 5 close, so now I scalp 1 more. I'm holding 1 more contract. I don't know how far this is going to go, but at this point is I don't have a target. I am trailing the stop down. Target, I am trailing the stop down. But target, so it could come down 5, 10 more points. It could even come down 20 more points, all I know, but who cares? We don't care about targets. Initial targets are yes, but anything more, you should be trailing your stop. Targets are yes, but anything more, you should be trailing your stop. Beautiful work by bears. Where else can they go? Well, if you're really inclined to find, that's 55.12. Next daily target. That's 23.75.12. That's about 10 points. It could come closer to it and then bounce, but we need a bear bar closing below this. 23.75 first. Globex target right there. Additional targets. We're going to bounce and retest this area. We might come down that way. We could bounce right here. So we could do this and then come down. Or we're going to keep selling, either or. To keep sell into this here, we need to close a bear bar on the 5-minute below 23.75. Then I would look for follow through selling. Another 5 to 10 points down below to the 12, 55.12. Or we're going to bounce, and then sellers are here somewhere, and then I'll sell again. On the daily, 2 targets, the 55.12 and a continuation to 50 SMA. I believe this is an SMA, but I expect a pullback here because it's an important target and they're taking profit. You need it to take profit. You can hold a runner, but you should also have your stop trail. Because if you look at the 3-minute chart, news coming up here, 5 seconds left, leg 1 pullback, leg 2 pullback, we could get another leg even if it's small. So really good but you saw that how I waited is 2-3 bars before I take any trade because it was gap down. I wanted to see what the agreement was. It's kind of like handshake. Are they agreeing to sell more? This is okay, fair price, even though way below the is moving average. Gap down. Gap down could be from moving average, is from close of yesterday, from yesterday's low. That's quite significant gap down. So they agreed to mark down the prices. Who am I to go against that? So I'm looking for a quick trap and sell. Bear sold again, disappointed with bar 3, sold again, above bar 2. That's why I said there are probably sellers above bar 2. If we were to get a bull bar, then I would have expected bar 1 high to be tested and then sell somewhere here again. But that never happened, so I said, well, I have 2 things to do here. Either I do nothing or I sell, but I do not buy. So the selling worked pretty good. But we have not closed below is a bear bar below 23.75. They're still taking profit here. It's news, so I am cautious. I moved my stop down. If it kicks me out, it kicks me out. It's trend from the open. is it is pausing here to create the third leg down. Okay, so this is the third leg, y'all. So we're gonna reverse soon. I need that bear bar closing below 23.75 to continue selling here. If it fails, we could get 5-10 points bounce. Gap down way too much. The moving average is way too far away. If we fail to close another bear bar, we could bounce here. And you can see with the lower wick of bar 6, so now bulls are looking for another bar with a significant sizable lower wick. If the bar closes on its low and below 23.75, selling will continue. So you can't rush to get out when you have more on the table to take. So wait for bar to show you if bears are covering their shorts faster before making any decision fast. Still selling? Still on that runner? Okay, we closed the bear bar, bar 7. But you are in the third leg right here. So leg 1, pull back. Leg 2, pause. Pull back. So 7 is the third leg down. Pause. Pull back. So 7 is the third leg down. Bear C target here. Bear C target there. The next daily target. Might be trying to reach right here. 1875. Nothing to buy, so you either do nothing or sell. It's coming down nicely. Technically, that was my measured move, and it met. Well, maybe one tick failure. It really didn't meet yet. So it's still, there's a one tick failure there. There we go. This time we met the target, but there is more to the downside. But that is the third leg down. A little bit more. I've stayed in this short. I'm still trailing that stump. Bar 8 is the only bull bar in a streak of 1, 2, 3, 4, 5, 6, 7, 7 bear bars. If you think of bar 3 as a one tick bear body. So I'm not going to buy anything here. Because it's the target, they front ran one tick before the target. That's why you get that bull bar, bar 8, but it continues to come down nicely. Next target is 12, 55, 12. 15, but further down the 12 area. And then 5508. So 5500 round number. This is the moving average from daily. Now you could say, hey, this was the second leg. is pause with 8. Now we are in officially third leg. Yeah, sure. Okay. That's fine. A little bit more. Not interested in buying anything just yet. Bar 9 is a really strong close. It's the best close since bar 1. Could this be exhaustion? Maybe. It's the best bear close. But to me, it's still bearish. Still coming down to the 12 target. Perhaps we could test that moving average on the daily. Yeah. No bull bars. I'm not interested in buying anything, but it's going to reverse soon, at least a bounce. But right now, it's still bearish, so. Open of the month. I don't have enough information, but let's see. Okay, so this is the open of the month, which is we are below open of the month, so I don't know what you're talking about there. Open of the month was way above. We already tested that. So it's just tested my higher time frame zone here. So can we still come down to these? Maybe, but look what just happened. We're probably going to bounce significantly here. I've done nothing. I'm still holding this. I can't just exit out of the trade just because I see a bull bar forming here. It is 3 legs down though, leg 1 pull back, leg 2 pull back with bar 8, and a leg 3, but I exit right now. It could still continue to sell. I would deprive myself. But if you want to take profit, then yeah, you're in a good place here. And we came very close to the daily target. We'll meet that target. So, but exiting here is, I think, it's could be bad decision on your part, unless you made a ton of money here and you don't care because you got better things to do in life than sit here and trade. Then be my guest, but I think there's more to downside the bear see. Bad follow through, but it's a one tick body doji, so it's market gotten very close. It's trying to confuse the traders. It's trying to shake them out. But it is the third leg, so everybody's like, do we exit since this is bad follow through? You need bull bars, right? So if you see a strong bull bar, then exit. I wouldn't sell above 10. It's a doji. And it's the one tick body, so it's probably trying to get to these strong bear bars upper third or overlap with the body of 8, bar 8 body. There could be sellers waiting right there. Not a good close, bar 11, barely closed on its midpoint, but by the open with doji, and we could get another bull bar perhaps, hoping the open of 9 or 8 body test area. Could go higher than that, but bulls need one more bull bar here. Bears disagree, so this is now a pullback. Bulls want a double bottom now, so they want to buy. If they're disappointed, they bought and hope that bring the market up here. Well, we don't know yet. This bar closes bearish, then they will buy lower to break even. But if it takes out the 10 low, could come down even more. Bulls still want to get back up here. They're buying below 11 or where they bought. Perhaps they're hoping to break even quickly. This is too low probably. I'd rather to sell around here. 8 body, 9 open. So I do expect bulls to bring price back up. This is the area I'm interested. Waiting for bulls to price to reach this area. That's why I'm waiting and quiet about it. This is the second leg up, first leg, second leg. So I want market to plot, just test that area. Might have already tested. I only measured from the body of 8 and these open of 9. So technically they have tested. Bears want to continue, but bulls already entered with second entry long is in this reversal. And they're disappointed. So the first entry above 9 and second entry is above 11. Might even be 12 late. So there's still, bulls want to make money here. So I'm just waiting. It's a pretty quiet day actually, regardless of these move down. It's just going pretty good. So leg 1, 10 and 11. Pullback is 12, and leg 2, 12 and 13 high. Pullback, second pullback 13. Bulls want to go up again, possibly. This is profit taken by bears right here, so they are taking profits. They're aware of the bulls, but not much of a bullish pressure here yet to reverse this market with a sharp reversal, but it could. It's just not sharp enough. So I still expect bulls to market to bring price up here. But it kind of did test there. So the bears still trying to sell this further down. We still have targets on the higher time frame. If we take out the 10 low, I do not have to exit out of this short. My stop was up here above 8. But if the bears fail to take out the 10 low, then bulls will show up again. That is the second sell for bears in a very bearish situation. So they want to continue, but they not only need to break this. I mean, they have to also close a bear bar here with 14 and break the bar 10 low. So if anyone entered the close or below 13, that's second entry short. They're targeting 10 low, and they want to break below 10 low. But bulls who bought and they're betting against this, hoping the market to get back up to somewhere here, disappointed now, and they might start to exit. All right, the next daily target is right there, either 1175 or 12. I guess it's 1175. I was wrong there. You're in a very tight bear channel here. So bears are still in charge. We broke the 10 low. We need another bear body. If we fail to get follow through, bulls will want to take out the 13 high. So stops moved above 13 high because we made a slight new low, but market makers know the stops are there. If we get a bull bar here, market will go and test the 13 high, and it might even go further up higher, but only if we get a bull bar. Failure to get a bull bar, selling will continue. The only problem with moving the stop above 13 is that bar 14 body is not below the prior low. So bears need a bear body closing below 10 low. Bear trend continues to come down. Bulls need to trap the bears here. If they want to reverse it back up to the 13 high, they have to trap the bears right here. That means they need a bull body. Inside bar could be sign of a reversal, but not a bull body. Some will put a buy order one tick above, looking for a trap. Now they're looking for a bull body or II. And I go back and test the 13 high, or at least the outside bar 14 high. Bears see this as follow through, and they're looking for a bear body to move under 14 low and get a breakout bar and continue to sell. Target is 55.08 still, although yeah, maybe 07.75 or lower. Bears are not trapped here. Not yet anyway, so they're still selling. Now, can the trap happen here? If the bears cannot close below bar 14 low with a bear body, then yeah, bulls will try to trap the bears. But the moment we get a bear close, bear body underneath 14 low, then there's no trap. It's just continuation for bears. What if it comes all the way down to the 14 low and suddenly closes a bull bar? That could be a trap. All right, so we reached the daily target, but there is also a little bit more into this target. I think either 8 or 7.75. I think either 8 or 7.75. Depending on how bar 16 body closes. It closes bullish, bearish, they will get to that target. If it closes bullish, that'll be a bear trap. We'll try to trap the bears here. 8 seconds to close this bar. Better if it closes bullish. Then there will be buy stop orders above 15. Bulls looking for some kind of a backdoor to enter. Now those buy orders are lowered above bar 16. So some bulls will buy above 16, looking for half the ATR scalp and then see if they can leave a runner. So if the bears take out the 16 low, they're going to cancel out that buy stop order, but there are buy stop orders now above 16 waiting. Bulls trying to keep this as trap. Bears trying to take out the 14 low with a bear body, and then follow through 16 low with a bear body and continue to sell. But we don't have that yet, so. Not a great buy signal bar 16, but still there are buy stop orders one tick above. I think there's still room to downside. Come down all the way, not just that's 775. We could go several points below that as well. There is a spike pullback channel going down. It's a wedge bottom, small wedge bottom with undershoot and overshoot. Undershoots 14 and overshoot 16 low. So bulls giving it a fight here, but they're going to have to get above 16 high. And the moment we move underneath 16 low, this is going to continue down. So it's a decision-making time here. Here we go, buyers. This ended up becoming that wedge and buy above. So I did buy, and I am scalped a little bit. I was trailing a buy stop order. I exited my short, and because of this bar, then I said, okay, I'll wait. I didn't buy right away because my buy stop order didn't get executed. So I moved it above 17 and then scalped very quickly. That was a really good scalp. So now I have a runner. But market can continue to come down, by the way. If we close a bear bar, obviously I'm going to exit out of that runner. But I've made plenty here. It's still a bear trend. It's still a channel, and we just tested the channel, approximately the channel high, and the bears want to continue to swing further down to 2R possibly, here and further down. So if this bar does not close on its mid and higher, I'm going to exit out. So bulls want the 55.19, somewhere around 1R. And furthermore up. If they can close a bull bar here. So anyone entered one tick above bar 17 is looking for 55.19, and furthermore up to 55 is 23, I think, like 22.75. Decent close, bar 18, could be 18 bar reversal soon. A trap did happen with bar 16, but inside bar 17, bulls bought above 17, made money, closed the bull bar around midpoint, but it's not all that great. So bulls need another bull bar here. They get it. They're going to quickly go and claim 55.19. And if they can get above 55.19, they will go for 2R, like 22.75, 23 maybe, I don't know. I'm more interested in the 55.19 if we get a second bull bar here. So that is their target. If you are a bull and bought. If you're a bear, your stop is above 13, so you do not need to exit. But be aware that bulls started to show up and they're trapping the bears already. But is the trap successful? That's the question. They got a half R, which is fine, but it's not a full R. So when one side traps but cannot get a full R, how successful is that, right? Is the bull pressure there? Probably not. So if we cannot get another bull bar, and bulls should not allow bar 18 low to be taken out. If they allow bears to take out the bar 18 low, that's it. We're never going to get to the 1R. This is kaput, done. We could continue to sell. But if we somehow in this 2.5 minutes, oh, we just took it out. So this is done. There's no bull pressure. So this is going to continue to probably try to come down. So that's why you should not be exiting out of your short. Now, what about slightly double bottom here? Oh no, it is a double bottom, not slightly. With bar 16 low and bar 19 low or wedge. It's trying to make a better wedge here by taking out the 16 low. Could be already wedge and double bottom and reversal, I don't know. Right now there is a target here, which is magnet 0775. So you can see that bulls wasted a chance here. So now bears selling this channel high and swinging down to this target. They might even want this target right here. It's a really good job by bears is containing the bulls who try to trap but failed. So what did I do? Well, I just exited out. So I'm flat right now. So now you have wedge 10, 16, and 19 low. Bulls bought above 17, not a good buy signal bar. Disappointed, all they got was a scalp, and it was a decent scalp, but disappointed with the trap attempt. So now they're gonna look for bears to bring the market and then buy again if they haven't exited. In a situation like this, from experience, when I see a trap fails by bulls, I don't linger or try to buy lower to fix something. I simply exit and sell because I have a higher probability of making money selling rather than adding to the losing position. Market is bearish. You tried something, it didn't work, just take the hint, right? So it's still a bear market, still coming down nicely. About to get the next target. I've been waiting for 0775. So if you are a bear, now we might thoroughly move underneath the 50 SMA and test underneath before bouncing. So this might come down a little bit more. But better to give yourself a little bit of reward here and then expect follow through. But it's going to reverse soon. because this is a spike and channel down, and it's going to reverse soon. It's going to get back up to the bar 11 and 12 area. It's been 20 bars since open, gapping is from the moving average. 5,500 is round number, which is also daily target, actually 99.50. Bear trend from the open, coming down, pretty tight channel, but eventually we're going to reverse back up. So look for those signs. We are in some kind of a spike and channel down. So it could be, it's a bear channel, whether it's small pullback bear trend or not. I don't think it is small pullback bear trend at all. It's a bear, so that's it's a bear trend from the open, creates a spike and a channel down. So look how many legs it sold. Like I said, you should have paid yourself a little bit here because we reached a major magnet. There's no bull bar. You don't need to be spooked yet. As far as I'm concerned, I've got a 2R target here the market can reach. And then another daily target here. We need to go into some kind of a trading range because it's been a very strong sell down, right? Bear trend coming down. So eventually we are going to go in some kind of a trading range. I don't see strong bull bars to exit out. If you're still selling, your stop is somewhere up here now because we're taking out those lows with strong bear bars. Stop should be tightened above bar 18. If we start to go sideways and up, market could snap back to the 55.19, 19.50 area where the selling began again, which is bar 13 open. And then look for sellers there once again. If bears want to keep the gap open to the moving average, they could allow bulls to get to the 13 open, only to sell once again. From there, it would be a good bounce, spike, pullback, and sell. If they fail to contain the the bulls around here, then we reach the moving average. Still bearish. There's nothing, no buy signal bar, no nothing. So you should keep selling this if you have sold underneath bar 1 or 3 or 4, maybe even 5. But bad follow through with bar 20. Sometimes bar 18 reversal comes in a couple of bars after. Market is definitely trying to get back up to this area, but there could be sellers there. Could this day be just small pullbacks and sell is all day long? If they manage to keep this 40 bars to these gapping to the moving average, they will sell the first pullback, and that pullback may not reach the moving average. And that would be, those kind of days are rare, but happen. So we could be selling this for a while. So you shouldn't be spooked. I got spooked here. I jumped back then. So I did make money there with right around here. with that bar 18. Thought maybe it's a good reversal. It could come back up to the 13. I jumped the gun there a little bit, but I did make money there. But I got myself reprieved from selling. So either I would have made money there or I would have made money here. It doesn't matter. I had only one contract trailing down. I made actually a lot more here, but still not. It was a counter trend. It turned out to be. It was a bad trap demonstrated by bulls, so they got punished for it. Sold again, 19, made some money again, and holding now. So I'm looking for 0225 or 5500 round number to be tested. So this time I'm not going to try to get spooked. So I'm back in, selling again. We reached a measured move, wanting to come down more. Or now that I see better structure there. Market maybe wanting to come down to 54, 53 area. That's too far away, I think. Way, way far away. 53, 50, somewhere down here. So it has to kind of accelerate and then go back up, form a trading range, and then continue to come down. So I'm going to go with these targets for now. So I'm going to go with these targets for now. Um, 82.75. That's 2R, 5502. All right, that's 2R is almost there. Good job, bears. They're doubling this range down. It's almost there. 0225. 99.50 possibly. We might even test that. Got a 2R. We just came so very close. 225. 225 also the measured move. Oh, this Globex range doubled. I sold again, 22. Obviously, it's a great close. It scalped a little, still holding. So I scalp while I swing as much as possible. Some people don't like to do that. I mean, it could just reverse any second. So here's the 2R target, 02 or 02, yeah, 02. And then the next daily target, 99, is 50, round number in between. Bears are relentlessly pushing this further down. So that's a 10 extra point from 40 points. It doesn't need to stop there. It could keep coming down 15, 20 points further down below. So it's good place to take some profit here. 2R from this breakout, trap and breakout. So they're taking some profit already. Came too close to the target, but bypassed 99.50. This is the breakout bar 19, so somewhere here we might go back and test, which is bar 18 low. Still bearish. Anyone selling still moving their stops further down, maybe somewhere up here. or above. The right place to leave it is above 18 high. Bulls want a good bull close inside bar so they can start buying above it. If many bears will start to exit above it. So bulls will look for 1225 pullback. Probably some sellers waiting above bar 23. And yeah, somewhere around here. It's no longer an inside bar, but like I said, there bears are covering some of their short contracts, but there were some sellers. So bar 24 hit the sell orders above 23, and it just came down, if you've noticed. But the bar close is bullish. We could go and test the midpoint of this last outside bar, which is bar 20. If we start to close bull bars above, which is 09, above 09, okay, market then will try to reach 1225. So target for bulls is 09. If they cannot find sellers here, or the sell order block here is, orders are blocks. Like, I'm not saying order block, so don't misunderstand what I'm saying, the terminology wise. There are blocks of orders everywhere. So if that block of order is not strong enough, bulls will punch through it. So 09 becomes the target. But we close one tick above a bull bar, then 1225 is your target. I'm not an order block trader by all means, so don't misunderstand what I'm saying. So looking for 09, see if there are any sellers there. It's a good place to sell again for bears, but strong bar wants to get follow through, so I would assume they're going to try to test 09. And if we close above it, then definitely 1225. Here we go. 09. It's a very critical area. Either there are sellers here or they're just going to buzz through it. Stops are above probably 18. Jimmy James, thank you. That's what I was worried about. Sometimes I say the L word, which is liquidity, and everybody just bends out of shape. And next thing you know, we got an argument going on. So I just want to make sure that nobody hears the wrong terminology there. But really, what order blocks are, is if you really want to learn, I'm not saying just you, but everybody else here, it really is a bunch of orders, is large amount of orders placed in the market that creates bad signal bars. So L's, I see them as L's, bad signal bars, is something that makes you buy, okay, but instead it goes the other way, traps you. So those are the order blocks. Or is, a bad signal bar, but still produces a really good price action, right? So it could be a bad buy signal bar. Instead, it actually produces a, push by bulls. Eventually, we're going to come back and retest it. Why? Because it's put in there to do something, right? Maybe it was a bear bar put in there, but suddenly market reverse and become a, bullish, and it's just moved more than 10 points. But that bad signal bar, even though it created a bullishness, we reverse back to it. Why does L say, oh, we're going to come back and retest it? Have you ever thought why that is? Why would we come back and retest it? That's because that order block of orders, okay, positioned there by some institution. So that means they're coming to get their investment. They don't leave money on the table, okay, is in the market unattended. They come back and collect it, and that's why those bad signal bars get tested. So if you want to understand what that is, look into it. Then you understand why. Basically, it's somebody calling an order block. It's just, they might have had a institutional background. It doesn't mean that they've taken L's, content material and repackaged it. But most of the time, that's always the case. There's always someone selling a course is a repackaged version of L's course, because they have followed L a long time, and then they saw, dollar signs, and they're ripping him off. But that doesn't mean ICT is a ripoff. I'm not saying that. Please don't, misunderstand what I'm saying. I have respect for every trader out there. If you're smart, you just look at and understand price action, and you have your own take on it. There are so many institutional traders become mentors. That doesn't mean that they are, scams. They know something. Good traders generally follow these institutional traders and, learn from there. I'm sure L has learned from institutional traders. L actually trains institutional traders for decades, right? He's been doing that. So don't get me wrong. I'm not, degrading anybody's content. I'm just trying to explain how I see it. So with L's, methods. Anywho. All right. I'm going to take a very quick break, and I'll be right back with question and answer. And I'm also going to add another 20 minutes, half hour to this. Okay, be right back. Bar 25 almost reached 1225, but didn't really test it. So bulls probably want a second leg up here for the moving average. This was a 2R. Came very close, but didn't really touch the target. So we could still sell. If we can't get another leg up here, okay, and we start to come down, bears want this target, 99.50. Even the round number has not been tested. So this is still a bear channel. This area sellers could be right here, only to sell all the way down here. So it's kind of an extension, false breakout. Or, so I don't like channels. Testing the channel high is we could come in right here. If you break the midpoint of the channel, break the midpoint of the channel, we could move all the way down here. Bulls want a second leg up and test the 1225 thoroughly, and not only that, but go above the 25 high, because 25 is it's an outside bar followed by an inside bar. If we get bull bars close and fail to take out the 25 low with a bear body, bulls will try to get back and test the 25 high. But 28 closes a bear body, we're going to come down and probably test the prior lows again, or the midpoint at least of this channel. So watch this area. The low of 25 is 0575. Bar 28 closes the bear bar, bears will try to push further down. If it fails, then we could see bull bars. So bears still own this market, and they're still selling. Remember, if you were a bear, your stop was above bar 18, right? So now this is not a good break down bar 27. So bulls want to test the 25 high and get back to the 18 high. But decision hasn't been made. As far as I'm concerned, bears are still making money here. If the 28 closes bearish, they will then come down and test the channel midpoint. Channel midpoint. So you should think of these as good pullbacks, but it could be also forming a trading range. Is a trend like this needs to go into a trading range before selling or reversing back up. So bears entered underneath bar 27, so they want 0250 and then further down 98.25. But I'm more interested in 0250. The only problem here is that buying was strong here. So this area is buyers waiting. So I want to see if the bears can finish this job and get the 0250 and a little lower. Bulls trying to get a second leg up, but two bear bars, 28, 20, 27, 28. Bulls getting the second entry long now. Bears disappointed. They might sell again somewhere around 0875, upper third of 27 to break even. That means coming down and retesting the low of 26. Disappointed bears. Their target was 55.0250 but they, disappointed here, so they want market to come down and test where they entered once again. So we just tested where I said we would, which is 0875, and they just got hit. Now, why is that? Why is that important area to sell? What do you have here? 25 followed by an inside bar, right? So if you actually measure, that's the half. That's the midpoint of bar 25, right? So if you're a disappointed bear, you sold underneath 26, where are you going to sell again? You could sell at the midpoint and expect the 26 low to be tested. And bears just did that, I believe. So they would, if they believe that this is a good second entry long and the bulls are going to continue to buy, if they exit out, okay, these bears right here, this bar, after giving them a break even underneath 26, will close bullish. That's how you know. Then we would get back to the bar 18. If the bar closes bearish, then we're coming back down to these lows again. So that's how you know the break even event is happening there. If those bears take the bait and exit out, then this bar is going to close on its side and we're going to go and test the 25 high. Probably they want the second leg is go higher, get closer to the moving average. But bears still own the market. But look what this bar just did. Anybody sold a close of 29, still able to break even with 30. Because retail traders are looking for is bar closes, right? They're not going to put a sell order here. Machines do that, but others will look for a confirmation. So if anybody sold a 29 close, they're still getting their break even plus. If anybody sold underneath 26, sold again, making money. So I'm giving this a little bit more time for bears to reach the target, 99.50. If they fail now, okay, tried once, tried twice, then bulls will show up. But this is forming a trading range now. We might need to go down and test the lows before trapping everybody. So this could still come down more. difficult to buy. It's just selling, right? So we take out this low again, we could keep selling, and sometime around maybe bar is 35 or bar 40, we could get a reversal. I don't know. We have to take out these lows first. But what if the bears cannot take out the 28 low? Could this be still a second leg up? Well, you could see that these bears fixed their bad trade here. If this bar last minute in 2 minutes and 20 seconds close on its high, those bears will exit, right? So, but this is a triangle now. Okay, bears want to break and test these lows. Bulls could get the breakout, but there could be sellers right there. So it's kind of difficult. If you're bear, keep selling because your stop is up there, right? So you want bears to take out these lows so you can move your stop above 25 high. If you're a bull, you bought this and you're looking for a second leg up, you're not going to be happy if the bears take out the 28 low. So it's very difficult to buy in a bear trend coming down, right? So there was a channel here which I removed. Right? Something like that. Not the best. Bears want the midpoint. So 99.50 is still target. And then 82.75 or 82. That should be 82.75. I mean, since 11, we've been consolidating. So market is deciding here. Bears need to take out the 21 low. I'm sorry, 23 low. Strong leg, consolidation, and then sells again. Proximate, conservative. We could get to that. Right. So you can also just about seems like a good place. Or simply do this. This would be my measurement. So market could continue to sell into 90.25. It's a trading range now, but I like to see bears move it further down and then bulls to trap and go back up again. Bears made 10 points here. If you measure from above bar 25 high, they're trying to continue to sell down. Take out the 23 low. So anyone sold and still swinging this down is, you're still safe here. But some bulls started to print consecutive bars here. I think there's still room to downside. I think market wants to still come down. Only if we make a higher low here, a major trend reversal starts. But how major is that? Probably just a test of the moving average and then resume the trend again. So I don't think there's nothing major reversal expected here. So market is still selling. There you go. All right, this was the daily target. And I've how did I find that? Okay, so is it's the same. So it's a trading range, right? You have outside bar followed by an inside bar. And the last one, we didn't have anything like that since these two bars with a diamond. We don't have any outside, inside. So that means I'm taking that range. Now we're moving underneath that range. You have a sell signal here, right? And what happened was they reversed it. So bears are disappointed. They were selling here. They might have sold underneath, sold close, but it bounced. So now they're selling, and I'm using these lines as targets. They're all calculated ahead of time. So now we're testing underneath the moving average. We could finally look for some kind of a reversal. We do have a wedge now, 10, 23, and 32. So here is undershoot, or I'm sorry, here is an overshoot, or this is going to keep coming down. If I just connect, it could come down more. We could actually test below that trend line. That would be an overshoot. That would be better, and then we trap and go up, and that would be the measured move target. So it's nothing to buy at, and several times bulls try to trap the bears, failed. So you know bears are in charge. Now we took out the 23 low. Those stops are moved above 25 high or 29 high, because you got a breakout bar after that. And now we still need a bear close below 23 to say that this is a good lower high, to keep a major lower high to keep your stop. But if we don't, suddenly this just goes right back up. Your stop, if you put it above 29 or 25, is going to be in jeopardy. But bears are still doing a great job. There's more room to downside. 54.95, 54.94 area perhaps. Here, 93.75. Here, 93.75. Where's this coming from? So think of this as first 30 minutes range breakouts, right? That's the measured move target, 93.75. Okay, so the 32 did close a bear bar, so it's okay to move the stop here. But too much selling, and was looking for an inside bar. A good close is a really good close to scare the bears and for possible reversal. So bar has to close like that. It actually went above. So it's a similar situation happening with 23.24. Because it's a daily target, they're actually taking profit there. But remember I said this is a trading range. It needs to come down and test. It's going to try to trap again, but we still have targets to downside. So it could be just pulling back to find sellers. I didn't buy this bar. Not interested buying above 32 either. I need to see some bullish pressure and is good reversal confirmation. Otherwise, I'm not interested in buying and holding into 25 high. Oscillating around the 5,500 round number. I'm going to open up the question box in the GoToWebinar. Overshoot there. It's possible to have an overshoot there. Sellers might be up here again, but bar 33 is really nice, so it's okay to expect moving average test. Okay, it's reasonable to buy one tick above. It's a trap now, and market is trying to get back to the moving average possibly. But there could be sellers still trying to keep the gap open, but I think the price is going to reach the moving average. Okay, so I just bought, but only one contract, and I am looking for somewhere around 55.10, 55.0975 to 55.1050, 10.5 area test. There might be some sellers there. So I'm going to scalp there quickly. If we can close this bar on its high. Bear's trying to keep the gap still open, but reasonable bar to buy, except it's a bad buy signal bar 32, so market wants to come back and retest it. But we could come down closer to the high of 32 and leave a gap open and go right back to the moving average. So my target was moving average. So I did buy 33, one tick above, scalped a little bit, and I was holding some more, and I'm still holding some more for the moving average and above test. But there's a bad buy signal bar, so the market likes to come down and retest it, right? But if we keep the gap open and fail to test its high, it could reverse back up again. So bulls are disappointed here, but a good bull bar, there will be buyers at the 33, the 50% pullback of 33. So bar 33 is, look, they hit a buy zone because it was a breakout, a good bar, and they're disappointed. So they're not going to allow bears to reach that 32 high, because failure to reach a fake block of orders that trap the bears, bulls will take over. It's a pain trade. It's just going to go right back up. So I'm still holding this runner. Unless bears show me otherwise. I don't like the bar 34, but it's still a second bull bar by the close. And it's reasonable to expect EMA test. So I think I answered that question. Murat. I get a countryman over here. Nice to meet you. Okay. So one question here is, hi Rose, how do you decide if it is going to be a swing entry or a scalp? Or you enter a good trade and watch if bars are forming, is your way for a swing, if not scalp and get out? Well, it's a loaded question, but I would recommend you to study a limit order versus stop order market and understand the characteristic of these two markets. If you are in a trading range and the bars are overlapping, you are in a limit order market. So your swing trades are not going to work unless you're swinging from the high of a trading range to down, then you have to take profit at the bottom. Okay, that's your only swing from edge to edge of the trading range, or buying at the low and selling at the high of the trading range. However, if you start to see gap bars, or maybe bars having gap bodies with a buy to close, that means they're buying one tick above bar like 33. That is a swing. Okay, so you got a wedge bottom, a good bar, but you're still in a trading range though. So with that context in mind, if this is your trading range, right, or maybe like this, and if you bought here, you kind of bought right in the middle. That's why you're getting this price action. But a bar like this 33, it's reasonable to expect the EMA test. EMA is right at the top of the trading range. So if you're swinging, you better be taking profit there. So yes, it's a good bar 33. Second entry long, trap of the bears, but these bears are pissed off, okay? Excuse my language, but they want to come down and retest here. They had an attempt to do so, and they failed. Look, some institutions kept that one tick. So bullish institutions are now trying to own the market, and they angered this institution, put this bar in here, trying to entice everybody else, continue to sell, right? And then those guys are trapped. They sold higher, which I said that they might. Tried to came down, but it failed. And now there's a one tick gap there, right? So bulls want market to continue to go up, at least the top of the trading range or the moving average. So these guys are upset. They want to sell and close this gap, and they want a test of 0250. Or the open. Okay, that's where they are going to collect their money. So always expect, if you're swinging, okay, I'm swinging this, I don't know if I'm going to get up there because there's a trading range here. In fact, here's how I find my trading range. Right, so I'm going to get rid of these. Right, so here is the low. I only take the bodies. Hold on. So here's the trading range. This is the trading range. So if this is the trading range, right? So you're smack in the middle. You're buying right here, right? You're smack in the middle of it. So, and that's fine. Say you did buy it. Market gave you a scalp there, because if you divide into 3, right? So you're in a limit order market. There are limit sellers waiting here, and they want to sell and get back to the bar 32. Okay, look, they just came down and tested bar 32 high. So those bears are like, okay, we're happy now. Now, if it reverses back up, we'll be okay. But their goal is to bring it all the way down to the open of 32, because that's where they sold, right? But now we don't get that, and suddenly we get a bull bar, we're going to get back up to the moving average. So think of it where you are. Is this a stop order market? Probably not. You're buying in the middle of a trading range, and you're in a trading range. So it's a limit order market. Chances are, even if you buy above 33 like I did, you have to scalp, which I did, because I always think the upper third, there's sellers waiting, and they did show up. So now you are in a limit order market still. But bigger context, you're in a bear trend. So what does a bear trend want? Test the lows again. All right, so where is it trying to go? It's trying to get to the open, because that's where this bar start to sell originally. That means those institutions are coming to get full recovery of their investment, and they just got it. Now, can we make a higher low? When would I buy again? I want to see bull bars. I want to see bull closes, right? And then I would want to buy again. Otherwise, you can't buy here, because bears can still make a new low here. They could be looking for this. maybe that, or with that low, another low. If we start to get bull bars, we're in the buy zone now, right? If we start to get bull bars, bull closes, then we're going to get back to the moving average. So what happened to the bulls? Bought above 33, reasonable. They're expecting the trading range highs tested and a moving average test. Well, they're angry. So what are they going to do? That was the low one, right? So they know the bears are going to probably look for a low two sell. So they might actually buy somewhere here at the lower third of bar 33 and then look for a break even, get back up to the 33 high. Okay, that's their break even. And then higher. If they're lucky, they would get it. If bears start to threaten the lows and start to close bear bars here, excuse me, at the close of 32, then those bulls will wait maybe like 5-10 points and then buy. So it's trading. I found that trading is all about timing. Okay, when to enter. Look at it, right? So what does Brad say? Count the legs. Count leg one, leg twos. Look at that. That's leg one. We're trying to get a leg two and failed, and the bears took over. So here is bulls have another leg here. So they want another one, right? Lower third, they're probably buyers here. What if they breach through it and make a new low? Now those bulls, okay, will probably going to buy lower, but they're going to wait. And that could fuel, either some bulls will exit out, they're not going to want to buy lower. If those bulls exit out, that would fuel this bar move down faster, but other bulls will buy 5-10 points lower to break even. So I always expect some buyers is at the lower third of a strong bull bar like 33 before I exit out of the long if I'm stuck. So the market is still selling, right? And another way to favor, just decide what you want to be. You want to be a buyer or you want to be a seller? What is the right? How do you determine that? Well, look at the chart. We're below the open of the day. We're below low of yesterday. We are below, the most important thing, we are below the 1 hour EMA. Look at this is gap. It gapped down too much, but we're also keeping this, right? So this gap to the moving average. I did say this is a trend, but eventually it's going to go sideways into a trading range before deciding if it wants to reverse or continue to come down. So, so before bar 39.40, we may not reverse fully. That's what I said as well. I don't know if you guys remember. This is bar 37, right? Eventually, we are going to pull back, but the bears can resume the trend once again. So, so if we are below the 1 hour EMA, if the 20 EMA is below the 1 hour EMA, then you should be looking to sell the pullbacks until you no longer can sell. Okay, so this is still a trading range. We're somewhat in a buy zone here. We're testing the lower third of bar 33. Probably some buyers here want to buy and bring it to the midpoint of this trading range, which is 0475, or one tick above at the 33 high or the close of 33 because that's where the bulls bought because they want to break even. So see what they're doing. So I'm not delusional. I'm not making up stuff as I go. And I see it, but doesn't mean that it's going to succeed. Doesn't mean that we're going to get there. But you saw how we hit that order, block of buy orders, right? Because always it is okay to expect those buyers try at least once. But if they fail, then those bulls will exit. Then we could accelerate down. But you saw what happened with that bar. And there's still 3 minutes. Bulls can still close a bull bar, or bears will, continue to sell. So now my probability for bulls is kind of diminishing here. So, but I don't know. It's the bar close that I have to wait for. but they take out the open of 33 or the close of 32s. Bears got this. They can push this further down. So now it's even becoming lower and lower, the probability for bulls to bring it back up to the 0475. Well, what if the bears cannot close below 33 or the open of 33? That's still, bulls will get another opportunity to reverse it back up. But it doesn't look good for them at the moment. Especially if the 37 closes is bearish. But bar hasn't closed. I cannot judge it. There is still 1 minute and 42 seconds for bulls to turn this around and trap those. But look what happened. This is not coincidence. Here, let me get rid of this. All right, so look what happened there. Bears who were selling underneath 31, maybe sold a closer under 30, right? Maybe even sold a close of 32, got to break even. Look, this bar tested the 32 close. In order to continue to come down, that bar needs to close a bear bar. If it fails, that's it. Those bears will exit. Now we're going to go and test the 33 high. So that's still buy low, sell high. You're still in some kind of a trading range. But it's still bearish. So market is deciding here what to do. Is bears want continuation. That means they have to close a bear bar below the close of 32. If they fail in 50 seconds, bulls will go and test the 33 high. So I gave you a long-winded answer. They're nags, and is hopefully with examples you understand what I mean. How do you determine the 15-minute ETH measurements, these ones in pink? Yeah, okay. I'll get to that in a minute. I'm not sure why you can't join. It's weird. I checked. You're not blocked or anything. Okay, I'll just message you. I know, it's just so crazy every time you send this. I don't understand why you cannot join, even with a new account. Maybe it's your IP address. Who knows? Okay, so just give me a second, everyone. I'm going to go back to the 15-minute chart. I actually went through the 15-minute chart. There was a session recorded, how I find these levels. So 15-minute chart, there was a session recorded, how I find these levels. So okay, so where you see where market is going back up is they want to get to the 33 high. Now bears need another bulls need another bull bar here. They did test the close, so if anybody bought the close, which they did, they got a break even there. 38, but better if it goes one tick above. Right? So either the close of 33 or the high of 33. So I entered it above high, one tick above. So I didn't quite get my break even. I got the average break even, but that's not what I'm after. I want a full break even. But if I don't get it, and this is just an average, and every bull is exiting, then I have no choice but to exit because this can make a new low. So you do have a wedge bottom and a higher low. Market is trying to reverse, but not showing me all that great price action. That great price action. Not a good buy signal. Bar 37 is not all that great, so no one's really buying. Bears trying to close that bear bar below the close of 32 to continue to sell. It's decision time here. Another wedge bottom is what the bears are after, so we might actually come down and test these lows, possibly. It's almost bar 40. We could get a midday reversal soon. But there is the measured move target, 93.75. Bears want and a further more down. And on the hourly is, I do have a target here. Market is still making its way down. But it's almost bar 40. So anyone sold is, we have a new breakout, so their stops are above 34. But no follow through, so better to keep it up here. Fantastic job by bears. Now you have a bunch of wedges here. There's one there. There's one there. Target is 93.75 to 90.25, or the measured move on the Globex chart, 88.75. There will be some buyers. Some machines are at 54.95. They're looking for buy and scalp a couple of points, so we might bounce there a little bit, 54.95. Even if we breach 54.95, it's going to come back to 54.95. So this ended up becoming a break even for bulls, and they exited. So did I. You see how bar 38 closed? You could sell underneath 38. You get the confirmation bulls are exiting. It's done. We're going to make a new low. So anybody sold underneath 38 now making money. Relentless selling. Let me see if I can. So here's a relentless selling. Market comes down, finally pulls back to moving average, but then resumes the trend, even sells the next time and 2 times after that, retests and sells and makes a new low. So this is what we're having right here. Bar 40, possible reversal with bar 40. Bulls will try at least. That's a micro double bottom after a wedge bottom. Now, if this bar closes bullish on its side, that's an outside up bar. Most likely we'll get follow through buying. Okay. If you see a strong bull bar, now is the time, maybe take some profit, exit out if you are still short, because bulls will make their way up to the moving average. We'll try at least, because this is a much better bar outside up. These 33 and 24 were not outside up bars. Yeah, they started, but their lows are not at the low or lower than the prior bars lows, right? So, but this one is. So wedge, micro double bottom, bar 40, possible reversal attempt there. So they want to get back to the moving average. What if we can't get to the moving average? What if we keep this gap open, suddenly we start to sell again? Well, I just showed you an example, but remember anybody who bought above 33, I said about 5-10 points below, they're going to buy. So either measure from where they bought, so that would be up, so that's just about 10 points, or from the low, okay, so that's about, it's not really 5 points, but they started to buy. So they were disappointed. If they didn't break even, they buy lower, and they are trying to get back to the 33 high again. But what about bears is, preventing moving average close? That's fine. We can certainly keep the gap open and continue to sell. So where's your stop? So if you're still selling and you don't want to be spooked by this bar, even though it might get followed through to the moving average, your stop is above 25. Although we have closed the bear bar below the prior low, right? Your stop is still there. Now we closed a bear bar prior this low. So your stop could be here. Okay, so you're hoping that the market is not going to come over there and kick you out. So, but bulls are trying hard to get to the 33 high. Now, they can get to the 33 high, get their break even, but not able to close bull bars. We could still keep the gap open. You would still be safe. So it's still a bear trend. Bears still own the market. Now, we do have an outside up bar, which is disappointment. But every time bulls try to buy, bears are trying to prevent that. So have I bought this? No. But it came so close to where I was stuck, I exited. At this time I did, because market is giving me another chance. And I was looking for market to come down from this low of like 5 points. Okay. That's where I wanted to buy. That's where I wanted to scale in. But it ended up going faster way before. Okay, that's a gift, right? That the market makers are saying, hey, listen, you didn't break even there, and here is your chance. We're going to get closer as much as possible. So I'm out, because market is still trying to keep that gap open. And this is a relentless selling, sell every pullback. We take out that 39 low, we're coming down to these levels. So I'm going to look to sell again. Okay, so about the levels and how I study the Globex chart pre-market. So doesn't need to be 15 minutes. It could be 30 minutes. So what I generally do is I use this indicator, which shows me where the selling and buying was strong. So and it marks it for me, right? So market came down and buying was very strong. When it gets down to this area, buyers are waiting here. They're going to hit a block of residual buy orders that left behind before market shoot up like that. So when it gets there, look, bounces. But if it breaks it, chances are it's going to want to get a measured move to the downside, right? Or measured move to the downside. So they broke it. It bounced, but they didn't get a good breakout. So then they broke it. What I can do now, I can measure from here all the way to here. This market can push all the way down to here. So this is the measured move target, 54, 57, 50. And if you're selling these levels, so I find them back in here, is you can use this indicator. It is called D value. Okay, it is free. You can find it if you're a Ninja Trader, ecosystem.com. I posted it under scripts and indicator and scripts. So I add more days, and then I find these strong buy zone and sell zone, and I mark them. And if I'm selling, I'm going to take profit there. If I see strong selling cutting through it, I'm going to keep selling into those levels. And if I see that was a structure support now broke, then it's giving me a measured move target. So I have a conservative measured move target and an actual measured move target. So market is trying to reach these areas. You can do this on an hourly chart. You could do this on a 30-minute, since we're using 15-minute. Yeah, it is a volume profile. It's called D value. I'm sorry. is just search for it under indicators and scripts. Play with it. Play with it. Bears are still selling this. They are safe with their stop above the major lower highs. Now you have an outside bar followed by an inside bar. It is 40.41. Bears want to take out the 40 low and continue to sell. So that means they have to close a bear body below, one tick below 40 low. You get that. That will be a basically the confirmation for bear breakout and continuation to sell. But most of the time when the outside bars are trading range bars. So we generally test it slow. If it's a bull bar, there might be buyers waiting to trap the bears only to reverse it back up, and we would test the high of the 40. So if market still can't get this 40 bar reversal, it's not doing all that great. So generally, I don't like to trade this because it's sold so much. But if you want to trade this, then your stop above 41. If you see bear bars moving beyond 41 low, that's a breakout. Your stop would be above, and you would look for 1 or 2 hour targets. It's just that it has sold so much, so I'm expecting bulls to trap the bears underneath bar 40 if we move underneath bar 40. Swing traders are still holding. They still see targets down here, so they're not spooked by the bar 40. You made so much that your stop being above 25 or 34, even if they come and get you, it just doesn't matter. You're not going to lose too much. So that's what the stop is for. But so measure bar 40. We're right at the midpoint of bar 40. If there are either sellers here, if there are no sellers here and the bull bar closes one tick above the midpoint of bar 40, then we're going to go and test the high of bar 40. Okay, let's see what the bears are up here. There might be some sell orders underneath 41, one tick under. Bears are still trying to add to their positions there, and because they see lower prices. I'm going to take a look at the news. There's a 5-year note auction coming up at 1 p.m. literally in, let's see, 40 seconds. Might accelerate the selling a little bit, but I don't think it's a big event. Tomorrow is durable goods. Those of you waiting for Tim Fairweather, they're going through a typhoon weather event. They're right in the path of the typhoon, so he's not sure if he's going to be able to stream tomorrow. I'm probably going to fill in for him, but if he shows up, then that's great. I'll just be sidelined, and if he loses any connection, I'll hop on. Okay, so you guys are not left alone. But that's what's happening right now, so hopefully he'll be safe and not be outside. So it's not a good time to go pick flowers, Tim. Don't do that. Just stay indoors. Flower picking is for another day. Bulls trying to get a second entry, and they got the second entry above 42. Look what happened there. Did we get that bear bar? Nope. So now what do the bulls want? They want to go and run the stop above 41. But what happens before then? These bears are upset because they already sold with a stop above 41 or 40. So if you actually measure, they hit a limit zone to sell again. So see? So there's a zone where those bears waiting, which is that two red lines. This is where they lace this area with sell orders, right? And they want to prevent bulls from closing above it, because if bulls close this above this zone, they're selling right now. The bears are selling again. We hit limit order sells right there. But if they, after that sell, if this bar does not close bearish and suddenly closes bullish, bulls want to demolish this, run the stop, and get back to the high of bar 40. But always expect in this area once or twice selling from this down, and look at that. So if you're a bear, you sold it, put a stop there, and you're looking for follow-through selling, news or no news, and you're disappointed with this inside, that's II, right? So 40, 41 and 42 II. So it's also a triangle, so it's a breakout mode. Either it's going to reverse or it's going to break down. So they're disappointed with 42. What are they going to do? They're going to measure the outside bar, and then they're going to lace this area with sell orders. Look, they're trying to bring market back down to the close of 41 where they sold probably, or one, yep, that's what they're sold. So they're trying to break even. So it is possible that this bar 43 could test there. It gave them already average, because if you are a bear, you sold here, you sell again, maybe you sold right at the edge. Look, this was your average break even. You already are making money. You just want a full break even, so you want this blue line to be tested. Okay, but market gave you a break even. You know, I talked about these measurements all the time in the past, so hopefully you learned something. So what about bears? If they do close a bear bar below the the close of 41, then they're going to try to take out the 40 low, but we still don't know. Okay, but look what just happened. Look at that bar came down. Did those bears get a break even? Yes. Now, if the bar closes up in this area, then the bulls will take over. Those bears could exit if they haven't exited. Then we could go and test the 40 high. So how do I know all this? I've been trading with this. You can learn about this in outside, inside, II, OII. Okay, so IOI, right? So 39 is an I, 40 is an O, 41 is an I. Then you have OII. So you got you can learn about it in the Brooks price action course bonus video 15 and 16. Watch. So I took that and I developed this. Well, I developed it way before I watched those videos. Those videos came out in last year. But I've been studying the outside inside bar behavior, is finding how to trap before the breakout. So there are two types of traps: bull's trap, bear's trap before the breakout. I wasn't playing into that in the range of this bar before, but now I'm comfortable how to trade with limit orders and scalp quickly, right? So, excuse me. So for example, here is a buy zone. They bought it, scalped it in here, those bulls, then the bears sold. Those bears scalped, right? There's a lot of scalping here. That's a limit order market. Eventually, you're going to get a stop order market. That's when you get the confirmation for a breakout after the traps happen. Traps can happen even outside. If the bears close a bear body below this bar 40, then they will try to come down, and these are their targets. Okay? But if we now close bull bars above the midpoint and violate this limit zone and close a bull bar, you can wait for the breakout confirmation above the high. Then you can buy the pullbacks and expect shallow target, first actual target, and the measured move target of that range. A lot of people don't see these nuances. They don't understand. But if you start to develop these kind of techniques with certain bar combos, you're going to see it clearly who's getting trapped. Look, that was a second entry long is II. right? So now bulls have a stop under 41 or 40. I would put it underneath 40, micro double bottom. Now you're looking for market to go and test above bar 40 high. Okay, 3 bull bars, II, it's a reversal. I'm looking for a high. This 0450 test is, and then eventually test 0550. I'm going to scalp in here. I jumped in with 2 contracts, and we're testing the high 040, but I'm looking for more. At least the test of 0450 is, I'm at 0425. I want to scalp the 0425. Just waiting for 0425. Like literally 1 tick underneath that trap zone high, but it can accelerate with the rate it's going. It can accelerate the 0550. I just scalped it. So that was a really good, I can see the traps, right? So bears just got trapped there. And with the II, that's great. So I can put a stop here and go for these targets. There it is. That's the shallow target. You could also scalp there. But we close a bull bar above it. We're going to get to here and then the measured move target up here. So go bulls. All right, I am done with my session, everyone. Bears probably want to resume this trend eventually, so we might need to go test here. 0850 I don't think they would resume right here. We would get follow through buying, but they might try to resume the trend again, or they're going to resume it here. I don't know. In order to become always in long, we have 3 bull bars, which is great. We need 1 more bull close. If this bar 44 closes above moving average, that's good. You need 1 more bull close. That's always in long. We could go back up to the bar 18 once again, but we could sell from there. But 3 bull bars that's good for bulls. It's just that trading range highs that we need to test, and there's sellers waiting. So the bulls want to get to the measured move target. Here are the levels I use. You can copy them. That's the shallow bull target. Actual first bull targets, and you can use 150. You don't have to use Fibonacci level, but they are dead on targets. But this is the target I'm interested in, 200%, which is closer to the bar 18 open. Actually, it's right there. Yeah, it's just 1 tick below, I think, 2 tick below. So anyway, looking for bulls to do better here. 825, 850, 850, and furthermore. Great job, bulls. I mean, I made so much here that I no longer need to trade rest of the afternoon. Bears failed there. I saw it, right? No bear bar closing below bar 40 and trap. And they closed the bull bar above the limit buy. Look. Bears even sold here, came down, but they couldn't close below this level. So they're not going to be able to sell. What does that mean? That means we're going to go back up here. Now we have a breakout bar. So it's very strong. That's a pullback to the breakout target. Now they're trying to get up there. But let's see. It could pull back all the way to the breakout point going, or it's just going to keep going higher. So at this point, you're in a runner. You moved your stop way above the entry point. You are safe. You already scalped. I've already scalped. So this is a runner. If it fails, it fails. Because I'm in a trading range, and we're testing kind of the trading range highs, or the upper third. Bulls want the next target, 850, possibly. And the measured move target, 200%, 1175, 1150. All right, I am done with my session, everybody. You all have a great day. I will see you guys. We'll see tomorrow maybe. If Tim Fairweather can't make it, or Friday. Bye, everyone.